Most Canadians don't overpay taxes because they're careless. They overpay because they don't understand the tax system. My name is Haseeb Hamdani, and today I'm going to teach you 5 legal tax strategies that you can utilize to save over $1 million in taxes. And no, this isn't about hiding income. It's about understanding tax system and utilizing it in your favor. Number one is a primary residence exemption. If you sell your primary resident home, all the gains are completely tax-free. For example, if you bought your primary home for $500,000 and you're selling it for $800,000, that $300,000 is completely tax-free. The two most powerful tax shelter account is TFSA, tax-free savings account. And if you were eligible for TFSA since 2019 and you didn't contribute ever, then now you have an approximately of $95,000 of TFSA room. Any gains inside TFSA, any dividends withdrawn, any withdrawal inside TFSA is completely tax-free. So, for example, if your $95,000 grow to $500,000 or even $1 million, that's all the gains completely tax-free. Of course, you cannot use it as an active trading business, but if used properly for long-term investments, this can generate generational wealth. Number 3, incorporating your business. Do you know that for first $500,000 of income, an incorporation pays 11 to 15% combined taxes depending upon the province that you are incorporated. On the other hand, personal income tax exceeds 50% in some cases. So keeping your profits inside corporation, you are delaying taxes, and reinvesting those profits, basically you are accelerating your capital accumulation. This isn't about avoiding taxes, but more about controlling the timing when you pay the taxes. Number 4, structuring your business for capital gains instead of employment income, because capital gains are taxed significantly more favorable than employment income. For example, first to $50,000 of capital gains is included only at 50%, which is significantly lower than employment income, which is included at, of course, 100%. That's why most smart entrepreneurs, they structure for capital gains, build wealth inside the corporation, then eventually exit, paying capital gains instead of employment income tax at full. And number 5, lifetime capital gains exemptions. If you own shares in a qualifying business corporation and if you meet certain conditions, all the capital gains up to $1 million are completely tax-free. To qualify, you must hold shares for more than 24 months and you must also meet an active business test. I believe this is the most powerful wealth building provisions in Canadian tax. And these are not loopholes, they are written in Canadian law. The difference between an average earner and a wealthy founder isn't income, it's about structure and understanding the tax system. If you want me to talk about any of these in more details, please comment below which one. And remember, before you grow, structure it right.